Hello, everyone. Thank you all for tuning in. It's Hatem and Ayal from GK, the founders of GK Tech Group, actually. And we're happy to host our webinar. We've been doing this for a few months now, actually. And we're going to talk about some of the disruption today. We're going to talk about who are the winners. Ayal, you want to kind of maybe recap a little bit about what we did, what we're doing?
Sure. Yeah. So for those of you who were with us through April, May, you saw a few of our webinars about technology and how they're going to dominate in the COVID era. We've obviously seen that come to pass over the last 6 months. A lot of the stuff that we talked about, big companies getting bigger, big technology getting bigger, and that has come to pass. And so we're here to talk a little bit today about some of the things that we can look at, not just the big tech names that everyone knows, Apple and Google, et cetera, but some of the other ideas and possibly companies that might benefit in a current and post-COVID world.
Yeah. So basically, the idea is COVID-19 has impacted every aspect of our lives. In my firm, at least, we're basically all of our business on Zoom. Companies like Microsoft have basically said that 2 years of digital transformations are happening in 2 months. And this has happened in all industries, ubiquitous, basically.
Yeah.
And also, not only it's ubiquitous, but it's across the globe. And we've never seen a time where everything had to change so fast at the same time.
Yeah.
And as a result, a lot of companies the nature of work has changed. Companies, organizations have to change. Mm-hmm. They need a comprehensive solution for their processes, for communication, for collaborations, and it all has to happen under a foundation of privacy and security. So it's really a lot if you think about it, right?
Yeah. Totally. Yeah. I mean, the online transformation has been incredible. I going through a lot of these companies. You obviously have companies like Microsoft, like you talked about, who are poised for digital transformation. Then you have companies that people don't really think about, like Nike and Target. Retail, like Nike's digital sales grew over 80% year over year. Target over 100%. And then, of course, Zoom, which we all know and use every day now, their revenue increased over 350% since last year. So this trend is going to happen across all businesses. And just like everything when it comes to innovation and disruption, if you're not adapting, you're dying. And if you are adapting, and if you have been able to jump on the digital bandwagon, then you're actually flourishing in this environment.
Yeah. With that being said, we're gonna have 2 really amazing guests today to speak to that. We're gonna have Devan and Pedro from GlobalX. GlobalX is an ETF provider and a partner of ours that we use, and they're really an expert in thematic investing. And what thematic investing means is just they invest in strategically in different sectors and provide resources and tools to figure out which sectors to invest in and why and so forth. It's really right in line with how GK works and how we do things. We don't believe in just owning everything at the same time. We want to be tactically owning different things at different times of the cycle and so forth. So GlobalX has been around since 2008, I think. Again, after another disruption. And we have Pedro and Devan here.
Welcome, guys.
Yeah, welcome, guys. Thank you for joining us.
Thanks for having us, guys.
Yeah.
Thanks for having us.
Of course. So I do kind of, for 1 second, want to talk about how Gerber, Kawasaki, and GlobalX kind of think along the same lines. Is our base philosophy of investing is what we call index plus alpha. Meaning we look at sectors of the market, we look at individual companies, and we really want to find the areas of the market that are poised for growth, right? And not just kind of look at, okay, let's own everything. And GlobalX really does provide that kind of value for us, and we're looking to look kind of like Hatem was saying, thematic investing, because we've all seen that Apple has gone from $1 trillion to $2 trillion. The so-called FANG names have been in vogue for a while, but these companies are huge now. These five big tech companies now make up 25% of the overall market. So we got to try to find opportunities in other areas, the next Apple, the next Google, etc. And this is kind of a great starting point. So kind of we'll let Pedro and Devan, introduce themselves and what Global X is all about.
Yeah, very excited to be here today talking about technologies that I'm passionate about, that our firm is passionate about. I'm a director with Global X. I'm based in California, just on the west side here. Pedro, I believe you are in New York, probably a little chillier there today. But a big component of our business at Global X, we are really focused on identifying macro level trends. And the fourth industrial revolution comes to mind for the bulk of these conversations. So we'll talk a little bit about which trends benefited during the stay-at-home economy. Then we'll talk a little bit about which trends have seen the biggest consumer adoption as we sort of shift and transition away from just the stay-at-home economy and a little bit more towards what we like to call the reopening economy. So very excited to be here today and kind of chat about a few of these topics. I think it's very important to kind of give a little bit of framework for how we think about this. Again, we're an ETF company, we are an asset manager, and we have a number of different verticals, but a big component of our business is thematic investing. Simply put, and it's really great to work with GK, obviously we're GX, Global X. We think along the same lines, and there's a number of parallels between our investment landscape. Thematic investing, and that's what we'll talk about today, it's really a forward-looking investment approach that is the process of identifying powerful macro-level trends and then looking to understand which companies are going to benefit as those trends start to materialize. That can range from esports, IoT, 5G, robotics, cloud computing, fintech. We'll talk about a number of those. But it is in somewhat of a contrast to traditional portfolio construction and portfolio management. Traditional portfolio construction tends to be backward looking. It assumes that history may or may not repeat itself. You're trying to identify different sorts of data and see if there's any consistency or inconsistencies with that data that you can take advantage of. It's a great way to run a portfolio. Complements what we do quite well. We're forward looking. We understand that the next time will be different. These are long-term, global, growth-oriented strategies. So you will see that there's quite a bit of a difference between some of the names that we hold and some of the names that you see other managers tend to hold. To come up with that, we have a framework for identifying and categorizing which themes are investable. This is a compilation of data and research that we read from academic sources, the World Economic Forum, Bain, BCG, Goldman Sachs, and you can see we break it into category, mega theme, and then sub-theme. There's technology, there's people, there's demographic, there's environment, and there's all sorts of themes in there. There's really three key criteria that we look for if we are going to launch an ETF and if we really want and believe that a theme is going to really come to fruition. The first would be conviction. I talk a lot about fintech when I think about conviction. I can't stand going to the bank. It takes way too much time. The business continuity isn't there for me. The time is really excessive. In COVID-19, I don't want to handle cash, and I don't frankly need to handle cash. So if you think about a structural shift that we have a lot of conviction in, financial services is going digital. It has been for some time, and you're seeing massive acceleration as a result of that. Another key criteria that we think about is time frame. So think about some of the fads that kind of come and go. We don't want to build a portfolio or a strategy for 2-3 years. We want to build a portfolio for 10, 20, 30 years down the line to make sure that we can maximize any sort of growth and return potential. I think a lot about robotics when I think about that. The guys at GK, they are experts on the street for all things autonomous vehicles and electric vehicles. These car manufacturers are relying heavily on robotics for a consistent reason. You can shore up your supply chain and you can integrate and produce a lot faster with people working with machines as opposed to just people or just machines. So you can really see examples and after example of how this technology has significant adoption and significant benefits. And we'll dive into that a little bit. And then the last thing that we look for is really investability. We want 20 names. We want evidence that that sector is growing. We can have diversified exposure to that sector, and we can take advantage of movements in that sector. So those are the three key criteria that we really think about when we're looking at launching a strategy or portfolio. And it's very, very similar, again, to what the team at Gerber is doing. It's a good transition to talk about where we're coming from and where we believe we're going. Obviously, COVID-19 flipped the world upside down for a number of reasons. And we transitioned to a stay-at-home economy very quickly. My firm, Global X, we integrated cloud computing software effectively overnight. E-commerce sales were up year over year, roughly 44% in the second quarter. And you're seeing a couple key things coming to fruition here as we shift to the reopening. Now, our firm, what we would like to do is really target sectors as they begin to grow in the early adoption phase. And technology has a concept called the diffusion of innovation theory. I call it the S-curve in English. And the S-curve just stands to position that most themes have a certain adoption curve. And that adoption curve will be accelerated or decelerated based on macro level trends. COVID-19 steepened that adoption curve, and it scaled it upwards significantly. E-commerce is a fantastic example of that.
Devin, love this. I love this slide because I think with COVID-19, right, we didn't have a choice. It's not like, one day it was just, hey, let's adopt things, right? It happened. Everyone had to be home. It's really abrupt way of things to happen. And what we find out is that a lot of businesses either adopted or not, right? And if you have the willingness to do so, you've done well. I think to Ayal and I, we talk about this. People say the market is disconnected from the economy. Not really, because a lot of the companies that are doing well right now in the market are the ones that just are either have adopted or are just very well disposed to take advantage of this disruption. So I think that's really some of the things, and you going through the stay-at-home economy versus the reopen economy would be really interesting for us.
Yeah, I mean, you're spot on. I believe there were 26 retail brick and mortar deaths, if you will, this year so far. It's very sad, but if you don't adopt, your business may die. And we've seen countless examples of that. And you've also seen different businesses start to diversify. You see Target and you see Walmart start to increase their digital presence. It's not because they wanted to, it's because they had to. And if they didn't, we know what would be happening. You can see Sears as an example of that. So unfortunately, there are catalysts here for opportunities, and then there are catalysts here for things we really don't want to associate ourselves with. And that's actually an awesome transition into the next slide. Again, diffusion of innovation theory, or something I just like to call the S-curve of adoption. Here are previous examples of different technologies and what their adoption curve really looks like. Now, we'll talk a little bit more today, and I'll pass it over to Pedro in a few minutes to talk about cloud and fintech and IoT and esports and robotics. But you can see that there are countless examples of technologies. And over the years, it all kind of follows some similar trajectory. I think it's very interesting and relevant to talk about the era of the Great Depression, actually. Not that COVID-19 is that, but it is a moment in time. We're all going to remember this when we're talking to our grandkids in 50 years about what's happened and what life was like then and how certain things changed and adapted. Today actually marks the 7-month anniversary of the last in-person client meeting I did. We're currently using cloud computing to host this webinar. So there's countless examples, but take a look at the refrigerator back in the 1930s. That was a very early nascent technology and saw massive adoption. And that was because folks needed to be able to store their consumer goods because it was cheaper than going to the grocery store. So when we look back in time, there's going to be countless examples of where that S-curve really just went up and to the right. And we'll dive into a couple of those themes in just a moment here. But it's interesting to think about how quickly we've adapted. Our firm is using Zoom and Slack, and we effectively did that overnight. So it's very interesting, and you guys are spot on, which sort of brings me to my next point of where we are right now. And we believe we are in the reopening economy. The reopening economy will be defined by two things. The first one is safety, and the second one is flexibility. I'm going to be working from home for some time, but at some point I will likely start seeing my clients again, and we'll be going into the offices. Schools are starting to reopen. Business continuity is becoming a concept. Now, we had the CARES Act, which is roughly $2 trillion of a backbone to help us adapt and to get here. Now there will be a number of new themes that will benefit from connectivity, robotics, and continued manufacturing that we're going to get to. But we firmly believe we are in the reopening economy. And a couple of the key themes that my colleague Pedro is going to hit on are right here. Cloud computing, which is what we're currently doing. Internet of Things. I actually stayed in a hotel for the first time recently in a very long time, and my phone was used to get into the hotel. It was used to get into my room as a key card, and that's how I controlled the remote control and the telephone inside the room. That's an Internet of Things connected device application. We'll talk a little bit about robotics and robotics manufacturing and how supply chains are reintegrating with robotics so there's less contact there. And then esports, we all want to be entertained. I'd rather be going to a Lakers game, not watching it on TV. But esports and digital communication entertainment, in our opinion, is a theme that is very likely poised to benefit as we continue to see people looking for ways to entertain themselves. So with that, I'm going to pass it over to my esteemed colleague, Pedro Palandrani. Pedro is an analyst covering technology, frequently cited in the Journal, Bloomberg, and other various financial media. So Pedro, thanks for joining us today. And here you go with cloud computing.
Yeah, no, thank you guys for having me today. Excited to be here. So yeah, let's get into the meat of this presentation. Starting with the cloud computing theme. I think it has been clear at this point that it's been a phenomenal year for cloud computing companies as we entered the work from home economy that you were describing, Devan. But that's, I guess, not new news anymore. And what we want to talk about today is the relevance of cloud computing as we reopen our economies and enter the new normal in the next few months or quarters. But as we go through these transitions, I think it is important to understand that cloud computing companies have become extremely ingrained in our way of working, studying, and even allowing us to maintain our social interactions. Before we get into the meat of cloud computing, we wanted to start with the definition and segments that represent the theme as a whole. So, cloud computing basically provides on-demand availability of computing resources, any type of data stored in software programs. And thanks to the cloud, all of these resources can be accessed via our smartphones, laptops, basically anywhere at any time. So this is really different to on-premise software that used to be installed in our computers, and having access to that computer was probably the only way to access the software. So all of that has changed with cloud computing. And here we're breaking down the theme into 5 different segments. We really think that this is really important to think about. First, we have the software as a service segment, the SaaS segment. You can think of Salesforce as probably a great example where all things related to CRM can be done. More recently, Zoom, as you guys have mentioned, became the best example, allowing us to stay connected. We had the ability to access the software from anywhere, just with an internet connection. And really, the companies that deliver software as a service applications are benefiting from very attractive business models, usually in the form of subscription-based with a strong generation of recurring revenue. So usually these companies charge a monthly subscription fee per user, which really leads to business visibility. And also what we're seeing today is great retention rates.
I want to kind of talk about that for a second, because as investors, we always look at SaaS companies because they're kind of the holy grail of investing because of that recurring revenue. And I look at old school technology companies like Microsoft, Adobe, all these companies that I used to buy Microsoft Office for my computer, and I had it for 5 to 10 years and never thought twice about it. And then somehow Microsoft has tricked me into thinking that I need it every year now, and I have to pay a monthly subscription. And be it Microsoft or Adobe or any of these old companies, the second they started using SaaS models, boom, the stocks went through the roof over the next 5 years.
Absolutely. I think it's really attractive, and for us as investors, having the opportunity to get access to these software as a service companies is quite interesting because we really have visibility into what the company will look like, right? We know kind of what the customer base is. They have strong retention rates. And usually when you look at these companies, I love to look at the net dollar revenue retention rate. That's a ratio that measures the revenue generated by a cohort of clients plus any upgrades minus any churn rate, all of that divided by the same revenue of the period. And usually these companies have that ratio to be over 100%, meaning that they're actually upgrading and upselling the software to existing clients rather than seeing clients actually dropping their subscription services. So again, as investors, I think it's really attractive what these companies have to offer. But moving on, there are 4 other segments at some degree with some similarities. I'll go quite quickly here. We have platform as a service companies. You can think of Twilio. They're a communication platform as a service company. Every time we order a Lyft or an Uber and we get messages or calls, all of those communications between the driver and the rider are happening via that communication platform. So basically, these are cloud resources that are supported by other applications. We also have the infrastructure as a service companies. These are public cloud companies like Amazon's AWS, Google Cloud, IBM, Microsoft Azure, Alibaba Cloud. The 4th group here is they're the data center REITs. They basically provide the behind-the-scenes infrastructure and real estate to the companies that I mentioned before, the Amazons of the world. And lastly, we have
Pedro. Before you move on,
sure,
I want to say this because the cloud is basically a bunch of data centers, right? And I think 2 weeks ago, I saw that Microsoft is building data center in the ocean, underwater. So I thought it was weird because we spent basically the last 10 years explaining to people what the cloud is. And now we have to tell them that the cloud is underwater.
That's actually accurate. One of the main costs of data center maintenance is the cooling systems. You have no idea how much money is actually going to keep these data centers cool, the servers cool. So having these data centers underwater actually helps to keep the cooling system, like a natural cooling system, if you wish. So that reduces significantly the cost. But that's quite fascinating.
Yeah.
All right. Without digging too deeply, I think that it is clear that, businesses, individuals like ourselves really rely on cloud infrastructure and software more than ever. So going through
real quick, the last one you had there, and I think it's one that people are less familiar with, is the edge computing, right? So as everything's gone to the cloud and everything's gone, away from our hard drives, edge is kind of almost like a hybrid, from my understanding, of the cloud and local storage. So can you talk a little bit about edge computing? Nvidia likes to talk a lot about edge with their GPUs and all this stuff. So can you give us a little bit of a background on that?
Yeah, no, absolutely. So essentially, as you can see here, that's a 5th group that we include within our cloud computing ETF. As we look at the future and we start seeing 5G connections proliferating, we're going to need a kind of a network connectivity to be closer to each other. That's going to drive cloud computing to actually also be a kind of close to the network. So that means that our smartphones, any connected device that we own is going to be somehow connected to the cloud in a way that it's going to allow us to have lower latency. Latency means a delay in data communication. So we're really going to be able to disrupt the old model of having just data centers miles and miles away from us. Kind of all the transactions are going to happen next to us, and that's going to increase significantly the speed of operation. So if you start thinking about autonomous vehicles, robotic surgery, all of that requires transactions to happen in just milliseconds. So edge computing is really going to help that happen, right? Otherwise, if you're going to have your autonomous vehicle send a command to a data center miles and miles away from where you are, those milliseconds can really be something that is very important, right? So you really need to reduce that latency as much as possible, and edge computing will help out with that.
Awesome.
Yeah, and one thing, so Pedro and I attended the Consumer Electronics Show this year. It's an annual trip at Global X, and we got to see some of the supercomputers. And Hatem, they are installed into very large cooling units that are likely ideal for underwater. So the edge might also be underwater along with the cloud. I know it's a little ironic point there, but nonetheless, kind of cool.
Funny.
All right, moving on here, guys. Clearly at the onset of the pandemic, I think we all saw a drastic uptick in interest around remote working, jobs especially, and related services, as it is evident by this chart. On the top left chart, we clearly saw a huge pickup in data usage during the first half of the year. And then the bottom left chart shows upstream data traffic growth, and that's data that users are uploading to the cloud, which again reinforces that the fact that we all have had to increase the use of cloud video conferencing, cloud-based VPN to securely access share files which are stored in our company's clouds. And even this webinar today is happening over the cloud, right? All of this growth has been reflected in the company's recent results, and I love this chart. If you look at the chart on the right, the software as a service quarter over quarter and year over year sales growth, what we're seeing here is that the group as a whole has continued to show growth relative to the S&P 500 companies that basically, as you can see, have experienced a decline in top line revenue. So if you look at the navy blue colors and the orange colors for Q2 2020, you can see that the software as a service companies actually continue to grow their revenue even during the first half of the year. That was very challenging for many companies in the S&P 500.
To that point, just to give a little bit more color on that, you know, the market, everyone thinks is doing so phenomenally well. The NASDAQ, which is obviously tech heavy, is up 25% for the year. The rest of the overall market is down 5%. If you strip out the big 5 tech names, the market's actually down for the year. And if you're a small company, anything under $2 billion, as they like to classify it, that index is actually down 5% for the year. So to your point here, and what we've been saying is, right, if you're big, if you're technologically savvy, if you're software as a service, this is a boon for your business. And if you're not, unfortunately, you're seeing the other side of that. This is what they tried to get into in the debate, right? This so-called K-shaped recovery. If anyone could say anything in the debate, we kind of got into that.
For sure. Awesome. And this is what has happened over the last couple of quarters. But as investors, we all want to better understand what the future looks like, right? And if we move to the next slide, Devan, please. The new normal, as it refers to working conditions, is most likely going to be on a hybrid way with employees working remotely more often, and more meetings are likely to be held over the cloud. And I think employers, for the first time ever, are actually offering some flexibility around remote working. So looking at what we know about the future, we can see that many companies have already announced that they will allow employees to continue to work remotely. One group actually told employees that they could work from home until 2021. And here we can see 6 high-profile companies with about 300,000 employees, and that includes Google, Warner Music, Amazon's corporate office, and a few others, as you can see there. And there's another group that actually told employees that they could work remotely permanently. And just these 6 companies have about 70,000 corporate employees. So, this is a very small sample size, but combined, these companies have about 400,000 employees and are expecting to continue at some degree to allow their workers to work remotely. And these are high-profile companies, but many other companies have approached the working situation in a similar fashion, and we would expect to see in the future a hybrid work environment. On the right-hand side, we're actually going to see that this is something employees actually have shown preference for. As you can see there, we gather some results from a recent survey that shows that employees are showing an increase in the willingness to work from home post COVID-19. So before COVID-19, employees were asked about their preferences to work from home, and these results were compared with a survey post-COVID. And there are significant changes. For example, 2 that actually are quite relevant here. Prior to COVID-19, only 9% of employees wanted to work from home 5 days per week. That number increased to 16% post-COVID-19. The greatest delta actually happened with the hybrid approach that I was just talking about. If you look at the number of employees that prior to COVID-19 wanted to work from home 2 to 3 days per week, they accounted for only about 10%. Post COVID-19, the story changed completely. Now we have about 40% of employees having a preference to work from home around 2 to 3 days per week. So I think this really shows how sticky these behaviors can be and why we're still going to continue to rely on cloud computing to support, in this case, work, but the same applies to many other activities that we do in our everyday lives.
So Pedro, like to that vein, I think two things come to my mind. One is security, right? Like if everyone is at home, right, using their own computers and stuff, how important is security there, right? And then two, sell your commercial real estate, right? I mean, you're in New York, so you're probably more impacted than we are.
For sure. No, yeah, absolutely. I think those are areas that will continue to be important and have investment opportunities. I think not only cloud computing, but if you start looking at Internet of Things or connected devices as a whole, you're going to see a huge proliferation. Actually, we're going to talk about that in a second. But the more connected devices we all have, the more opportunities for a cyber attack to happen. So cybersecurity will for sure continue to increase. We talked pretty much quite often to chief information officers across many industries, and their top priority continues to be cybersecurity spending. So that's why you may continue to see a kind of cybersecurity within IT spending to continue to grow in the years to come.
I'm curious if, we have a lot of, to Hatem, to your point about commercial real estate kind of, left holding the bag. Do you guys think we see a repurposing of a lot of this real estate to logistics for, be it e-commerce or data centers or things like that? Knowing, I mean, we work across the street from a building that probably houses thousands of employees that's still empty completely 6 months later, 7 months later, whatever the number is. Like if that's a year or 2 years, at what point does the landlord start to go, okay, maybe this is not the right model for us. Maybe we need to repurpose some of this.
Yeah. I mean, I think that infrastructure as a whole will see also a significant transformation, not only around that, but even autonomous vehicles. What's going to happen with all these parking space that we have around the country, right? All of that will be repurposed, maybe warehouses for e-commerce, maybe data centers. So we all have kind of the ability to connect or to have our connections happening closer to each other. So I think without a doubt, infrastructure is going to change in the next decade for sure. I'm excited to see what's going to look like.
Yeah, I would say last thing on the cloud before we hit on IoT for any viewers, we had 2 internet connection issues right before this. So we continue to rely on the cloud. Security is very important, and we are that much more dependent upon it. So it needs to be continued to be invested in because we almost crashed 5 minutes before we went live today.
Yeah.
All right. Awesome. So, well,
a great transition for Internet of Things, Pedro. So I think that should be a good backdrop.
Absolutely. You guys made it easy to me. But yeah, the Internet of Things team, starting as well at a high level, I think that IoT refers to the idea that everyday devices can be connected to the internet and be smart. And without getting too deep into the definition, we can see here that many estimates have connected devices reaching about 75 billion by 2025 from about 26 billion last year. That is a 3x growth rate in a period of 6 to 7 years, right? So I was just mentioning the growth or the proliferation of connected devices and what that means for security. But clearly, there is also an opportunity here for connected devices, right? We have a few kind of tailwinds supporting this trend. We have rapidly failing cost, and I'm going to talk about that in just a second. We also have growing commercial adoption, even outside the industrial segment. Now we see chips, semiconductors, microprocessors in multiple devices from multiple industries, even from microwaves, light bulbs, doorbells, to kind of high-end technologies like robotic surgery, autonomous and electric vehicles, and the list just goes on. Consumer behaviors are also changing quite a bit in favoring smart and connected devices. Given that the cost differential between a smart product and a non-smart product is very, very low, it is making the decision easy for consumers to tilt their behaviors to favor smart and connected devices. And of course, we talked a little bit about 5G, but the 5G rollout is also expected to be a huge tailwind for Internet of Things, right? And as we look at these sub-segments that could potentially benefit from this proliferation of connected devices, we have also identified a few segments. I mentioned before, connected device manufacturers, and that includes smart equipment, vehicle and infrastructure manufacturers as well. Also, and absolutely semiconductor companies and networking companies as well may probably be the best companies to capture the growth opportunities in this theme.
Yeah, and I know I've talked about Nvidia earlier in this, but their CEO Jensen Huang, who's one of our favorite CEOs, just kind of for his vision. They had their keynote yesterday, and he says he envisions a world where there's trillions, not billions, of connected devices. And with that, when he said that, I was like, what? And then it's a fun experiment for you guys to go, everyone do this at home. First of all, try to guess how many connected devices you have, and then go to your actual house and work and figure out how many actual connected devices you really do have. Because mine was twice as many as I thought of in my brain. Where my TV and my Ring doorbell and my phone and my speakers, it's all these things that we don't even think about. Like this toy that my son has is a connected device now. It's kind of amazing. And semiconductors obviously are the infrastructure that will power this stuff.
Guys, I'm gonna throw just a little kind of disclosure here. Please don't take this as a recommendation to. We have to do it. But listen, Pedro, thank you. Like this 5G IoT theme has been one of ours and at GK for many years, and we're seeing it play through. But I'd like to ask you, for example, 5G has been all a talk, but Apple is coming out with a 5G phone supposedly in November. IoT is not about the Apple phone; it's about much more than that. Correct?
100%, right. IoT really, the way I see it, IoT refers to the idea that we have vast arrays of cloud storage. We have a declining cost of sensor devices. We have declining cost of networking equipment. And we also have increasingly sophisticated algorithms that can analyze all the data that is being created by these connected devices. I think you're hitting in a key point. Internet of Things devices are not just smart for a reason or because it's fun to have a Roomba vacuum that helps you out at home. It's really collecting a lot of data from consumers and helping us and helping organizations to make better decisions about the future. We're analysts, we're investors. We love to have data. We love to try to predict what would happen in the future. So having the ability to really collect and analyze a lot of data is very powerful.
Yeah. Did you see The Social Dilemma?
Of course I did. I don't agree 100% with it.
It's a conversation for another talk, guys.
That's another talk. No, I just funny. Like this is front and center to everybody's mind, and obviously this is why we're having this talk, because with every technology we have the good, and then we obviously had the bad that comes with it as well. So when your Roomba is recording, exactly. Thanks for reminding me. I didn't count that in my connected devices, so I got to add another one. Yeah. But it's collecting data on your house, right? Like everything that's going on in your house. So it's kind of mind blowing how we're going to secure all this data for the foreseeable future.
For sure, it is. And on the next slide, actually, one of the most fascinating things that I love to talk about here, you're seeing a chip, a Wi-Fi chip that on the top left side of the chart that you may find in a number of different household smart devices, like the robotic vacuum that you just mentioned. That same chip was used in the first iPhone back in 2007, and it cost about $7.40 per unit. Fast forward 13 years, the same chip cost about 10 cents. So that's almost a 90% decline in cost, and talks about why we have a proliferation of connected devices. The image below shows a dime compared to the size of these chips. And of course, these images are to scale, but essentially that Wi-Fi chip is 1/10 of the size of a dime. So as you may have guessed, this is Moore's law in action, right? Something that we still see that it's taking place in our economies, and why we have so many connected devices. Now, the question is how all of these kind of tech talk that we're having relates to the reopening economy. And to answer that, we have this table on the right side, because since now it's possible to have connectivity in many devices, we have noticed that connected devices are playing a very important role in the reopening economy, as they're used to measure occupancy, density, take temperature readings, even detect early signs of COVID-19 infections, and all of it while allowing data to be stored and analyzed in the cloud. So, organizations can keep track of all this data and prevent spreads by taking immediate action. So, as you can see here, these technologies include sensors, wearables, drones, and robots. So, like you say, Internet of Things is really just more than a connected device. Now we're actually using to help us to reopen our economies.
Yeah.
Devan, if we go to the next slide really quick, maybe we can talk about two kind of concrete examples. If we look at wearables, there's a large number of physiological metrics currently capable of being measured from commercial wearable sensors. And the power of wearable devices is that changes in these physiological metrics can be read by an early detection algorithm for COVID-19 monitoring. So essentially, you have programs such as the one from Fitbit just 3 weeks ago, where over 100,000 Fitbit users across the United States and Canada sign up to allow Fitbit to actually detect and inform users for early symptoms of COVID-19. And actually, the study showed that all of these wearables devices detected nearly 50% of COVID cases at least one day before participants reported any kind of symptoms. So, imagine how important this is by allowing people in companies to actually take quick actions and identify at-risk communities. So I think this is quite important, and one of the use cases that we're seeing from connected devices. Sensors as well, and I know that we're a bit short in time, but these are kind of great examples. Happy to share more with you.
I mean, isn't the new Apple Watch, I think, has a blood oxygen saturation sensor. I mean, it is $700, but we do own the stock for that reason. But it's definitely it's a great way of using it. And frankly, don't talk politics, but we have done such a poor job in this country dealing with COVID-19. But this contact tracing technology can be made so much easier with some of this technology. We just haven't done a good job doing it.
Yeah, absolutely. But it's not only going to be about this pandemic. Future pandemics will have the ability to be supported by these type of technologies that hopefully will help us out to take better actions in the future.
Awesome.
Guys, if you don't have more questions, maybe we can jump into the video games and esports thing, because I know we're a bit short in time.
Yeah. Let's do that. For those of you who again have followed us for a while, or our clients, that video games is a theme here at Gerber Kawasaki. The gaming, we've done this in our past webinars as well. Gaming, just like all the other things we talked about today, COVID was not the cause of it. COVID was the accelerant. And I think you guys have some numbers here, but it's just, it seems to me that especially with, kind of the unfortunate demise of movie theaters and all this kind of stuff, that video games are not only here to stay, but might be the biggest entertainment venue in the world at this point.
Yes, sir. Well, we're going to talk about that because I think what it's so important to recognize is that the video games industry and esports combined, it's a very, very large market. As you can see here, we're talking about a $150 billion market that, just for context, is larger than the box office and professional sports revenue combined. So even if we look at the highest grossing video game ever on the top right corner of the slide, we can see that GTA 5 reached $6 billion in sales, and this was back in 2013. But the highest grossing movie ever, Avengers Endgame, just last year, reached only half of that, right? So about $3 billion. So we're really talking about a very, very large market. From a geographic perspective, I think the US is the largest gaming market by revenue. It's very closely followed by China and Asia as a whole. But it is important to understand by investors that this is a global theme with multiple companies from all around the world, right? So I think it's important to recognize that the opportunity is not only here or China. We're actually seeing a lot of growth in Latin America, Europe, all over the world, to be honest. And I mentioned $150 billion, but the revenue is actually expected to reach about $200 billion by 2022. So clearly showing the growth opportunities available in this theme.
Yeah. And we're seeing more, right? We're talking about cloud and Internet of Things, right? We're seeing video gaming increasingly becoming digital and cloud-based. Cross-platform now is what they're talking about, right? This is every gamer's dream. That I'm not a gamer personally, but I know several of them. But everybody's been talking about being able to play your PC game and your PlayStation game and your Xbox against each other. So that's coming. You have Google and Apple and all these companies coming out with cloud-based, right, gaming systems, and Microsoft. So it all kind of gets intertwined, right?
Yeah,
absolutely.
Pedro, can you talk a little bit about maybe some of the game engines? I know Unity is a story that a lot of people are talking about. It's a new stock that went public.
Yeah.
A few shares here and there. We have a lot of clients who are in gaming, so we know this space quite well.
Yeah, Unity recent IPO, the stock has done pretty well over I think it's been 3 weeks since it's been public. I really think that the back end technology for video game publishers and developers is going to be more important than ever. But even at the very kind of high end of the technology spectrum, if we look at even consoles that are expected to be released at the end of this year by Microsoft, launching the Xbox Series X and their digital edition. Sony is going to be doing the same. Just in a few weeks, actually, in mid-November, we're going to see the release of these new consoles. This usually kind of has spillover effects over the overall gaming industry. So if you think about it, what's the first thing that we all do when we buy a new console, right? We buy 2-3 video games to actually try out that new video game console. So what happens with that is that we have positive spillover effects over the industry, right? So consoles are complementary goods to video games. And if we look back at history, we can see here on the left-hand side that in 2013, that was the latest upgrade cycle where we had the PS4 release and the Xbox One release. Now we're actually going to have 7 years later, the next console cycle. But if we look at the 2013 to 2014 period and looking at the right-hand side, you can see that all of these video game publishers and developers, Activision Blizzard, Ubisoft, Take-Two Interactive, Electronic Arts, all of them outperform the technology sector and the S&P 500. Again, this is kind of very complementary, very synergistic. So when you have new consoles and kind of what you're seeing with Unity and kind of the Epic engine as well, all of that is very synergistic with the industry as a whole.
Yeah.
But the consoles, that's kind of just one more driver. If we look at the next slide, I think Ayal, you talk a little bit about cloud gaming, right?
Yeah.
I think that's a big difference that we're actually going to see, right? Because if you start looking at the recent launches of Google Stadia, Amazon announcing Amazon Luna, all of these big tech companies really want to take part on the opportunity here. PlayStation is doing the same with PlayStation Now. Microsoft is doing the same with xCloud and Game Pass. So again, I really think that just as Netflix disrupted the distribution model for movies and TV shows, cloud gaming could have a very similar impact on the video game industry. I think it's very powerful when not only you have the opportunity to play across different consoles or platforms, but imagine kind of the ability for you as a gamer to actually play AAA games from your smartphone, stop there, hit the pause button, and then continue to play on your consoles, on your PC. So that incrementally is going to allow players to play more. And for video game companies in the video game industry, that translates into greater revenues because you have all of these microtransactions, add-ons, you're buying new dance moves, you're buying weapons, new characters, all of that continues to add up. So it's very powerful for the video game industry.
Let's give a shout out to Activision, who's our neighbor actually.
Yeah.
Literally next door to us. Fantastic company, holding of GK. A lot of clients are ours actually too. So really excited. I think when you're talking about Pedro is really the super cycle, right? Where every 4 to 5 years you have all these upgrades and consoles. Very bullish on the sector. Thank you for that.
Oh, 7 years in this case. It's been a really long time. So I think people are itching.
Yeah, absolutely.
I think it's often overlooked too that it's a multi-generational theme. It's not just millennials. It's a broad theme. It's not just Gen Z. It's boomers, and there are people that want to be entertained that are no longer in position to go outside or do not want to go outside because games are fun. It's more than just Zelda. So
you don't think when we can go outside, people will stop playing video games?
Let's hope so. But there's clearly other avenues to entertain yourself if that's what you're looking for. So it's a really much more impactful business than I think most people have given it credit for. Kind of a sleeper industry.
Yeah, for sure. So I think we're running up against the clock here. I think we want to have some time for some questions. This was all really great information. Again, these are themes. The reason we have Global X on is because these are the exact themes that we think about. Also, we love gaming. If Ross, our CEO, was on, did a very big event a couple weeks ago with the Wrap. And Kara Swisher, and we did one with Take-Two Interactive CEO last year. So we know a lot about these spaces, and we appreciate your guys' insight. And so let's, we have I have one question here, which I'm not sure I understand, so I'm going to defer to you guys. And it says, what data architecture setup company for IoT is popular these days and for the next years? So I'm not really sure what data architecture setup company is, but maybe that's because I'm just a lowly financial advisor.
No, I think we could get more context on that question to be able to answer that. But maybe we can, if we get more color on the question, I'm happy to get back to you guys.
Okay, sounds good. I think you guys did such a great job of explaining things that nobody has any questions because they're.
Yeah. No, we'll have a couple of questions here.
Okay, good.
The most important one is, what is Pedro's accent from?
Very strong accent. I agree. Italian parents, but I born and raised in Venezuela. Grew up in Venezuela. came to US a few years ago. But yeah, it's still a strong accent here.
Awesome. No, Pedro, thank you for that presentation. And obviously, love the diversity.
This is the most diverse talk in finance that you'll ever see with 3 of the 4 names. No offense, Devan.
Yeah, I've been trying to get Pedro's accent for like 2 years now. I'm just not picking up for me. So,
I gotta work harder, man. Work harder. So I have a question about China, right? So I think it's front and center right now with what's going on politically, but also China has some massive tech players, Alibaba, Tencent, and all these companies who are actually big players in IoT and cloud and so forth. And the question is right now, are we going to have 2 different internets? We kind of do, but is that really the direction we're going, or are we merging at some point? And I mean, obviously, I don't know if these real answer. I'd love your insights.
Devan, I saw you wanted to answer that, or you want me to say?
Well, I'll punt it to you, but you're going to see a continued bifurcation. We run a number of China strategies, so we kind of look at that from like the local currency and the local shares as well, because there is a bifurcation in usage depending on if it's U.S. listed ADRs or if it's overseas. But I think you're going to see a bifurcation of the internet to some extent, and there will be ways to capitalize on that. And Pedro, I'll give it over to you for a few more specifics, but that is a long-term geopolitical theme driven by tension and driven by Twitter and challenges, and it's going to be a really interesting one to look at in the coming decades.
Yeah, I think we got a little bit of what's going to happen with the TikTok issue, right? I think that's not only a social media company, it's a data company. Ultimately, we talk a little bit about the importance of data. So, as data becomes increasingly important for our economies, our countries, I think we're unfortunately going to continue to see that bifurcation that Devan was making reference to. Not really ideal for us investors, but it's going to happen. Hopefully, during these kind of the 2020s, we'll get to get to an agreement and try to get back to where we were before as far as collaboration goes.
Are they ahead of us? I mean, I went to China last year. I was there for a few hours, not that long, but everything is app-based over there. Payment already. I mean, this was last year, pre-COVID. So, I mean, do we think that they are ahead of us? It seems like in some ways.
In what sense, though? Because I think, remember that they're building a new infrastructure, right? So we're almost like, we're building cities on top of cities, right? Like they used to, and they went straight from agrarian to digital.
Yeah.
And so they have a completely new infrastructure. So are they ahead? I think they're ahead in some things, and I think their government structure compared to ours actually lends to a faster adoption of these kinds of things. The stuff that we worry about here, right? Surveillance, privacy, our devices telling people about us. That's crap that that the Chinese government is going, yes, give us more.
Yeah, it's tough to battle when you have macro level support as well as consumer adoption at the exact same time. And China has macro level support. They have policy support and consumer adoption that's sort of organically driven by the government there. So it's a real challenge. Again, so we go to the Consumer Electronics Show every year. A vast majority of those companies are Chinese, got Asian companies, and then by default, Chinese companies there. Because they've moved from the agrarian to a consumer-led, tech-driven economy. And there's a lot of industries there, like you don't really talk about China industrials a whole heck of a lot. They are making a huge renewable push and a huge push. I mean, that's part of the reason Tesla's got a battery factory in China. Like they're pretty much going from 0 to 100 very quickly. Yeah. So they have, I may not agree with their political structure, but agnostic of that, they have support for their technology. And that's where I think it gets really interesting. And it's an economy you can't ignore. You might want to, but you really can't. They're quickly becoming, the world's biggest economy. So it is something to look out for. And a lot of the companies that we own in a number of the ETFs we just mentioned, they are from China. We are globally unconstrained when we're looking at the landscape. So it is kind of interesting to witness how quickly their market cap stalwarts are becoming almost as big as ours.
Yeah, and I think that's I love that global unconstrained. We have these discussions all the time in our office. The more academic versions of investment managers love to talk about owning U.S. versus domestic. We had a very lively debate last week, right, Hatem?
Yeah, we did.
About international and what actually constitutes an international company. Like, is it international because it's from China, or is it a company that sells 80% of its business to China? Is that an international company? So I think this sort of old world model, and this is kind of wrapping up what we've been talking about this whole time, right? Which is the way we all look at the world is, where is the world going? Not where was it? What's the future versus what's worked in the past? And globalization has created, despite all of the attempts to stop globalization, you can't stop it. It's a runaway train at this point. And looking at companies that, agnostic of wherever they're from, like you said, if it's Tencent from China or Alibaba or here or SAP in Europe or whatever the case may be, these are companies. But if you don't have a technology sector, we had this conversation about Europe. If you don't have a tech sector, you're probably falling behind. And China does have a very robust tech sector, and so does Korea and stuff. So we look at these companies for people who are kind of trying to think of how we construct portfolios. Is we're looking on a global level, on an industry sector level, on an individual company level, and then where they do their business, and then the themes kind of going forward, and what we think the trends of the future are going to be.
So I think we're right up to the hour.
Yeah.
Really thank you, Devan, Pedro. Really, really awesome insights. It's awesome for us, for the tech group, to have you guys and kind of keep the conversation going. I'm sure we'll get you guys back. There's other sectors we wanted to talk about. I'm actually surprised we got through the hour without talking about Tesla. Pretty amazing. But really, I'm definitely want to have you guys talk about different sectors soon. I really appreciate you taking the time. I love the work that Global X does. Thank you for supporting us. Thank you for bringing us products and really solutions that we could not find anywhere else. And obviously love the collaboration. So, and thanks everyone else who tuned in. I'm sure this thing will live on YouTube, and hopefully we'll see it more. Send us some questions and so forth. And that's it. Cheers, guys. Stay safe.
Thank you.
Thank you. Bye.
Bye.